So this is what we're talking about when we're saying that this idea of tradable permits is efficient. It's efficient in that it's lowering the total cost to the system of reducing pollution. And the reason is that the market mechanism is acting such that the companies for whom it's cheapest to clean up actually clean up, and those for whom it's most expensive to clean up don't. And this doesn't rely on any sort of government knowledge about these costs, because the costs are reflected in the firm's decision-making process, as we saw here. Let's think about this from a bit of a policy perspective here. It shouldn't be entirely surprising that, in general, this idea of cap and trade, or tradable permits as we've been calling it here, is more appealing than just saying, well, each of you is getting 40 permits and you're not allowed to trade them at all. Although it's really not a perfect solution, because again, let's think about the equity side of things. Here, you can say, well, is it really right for firm C to be profiting off of this whole deal? Shouldn't the cost of cleaning up really be shared by everybody rather than one company actually doing better than when the cleanup was not required? So it gets to be a little bit of a tricky situation here in that even though it's efficient in terms of lowering the overall cost, it's not always clear or not always clearly fair how the costs or the profits are to be divided among the companies. Which is why this becomes such a difficult question, because we say, what's fair in terms of the initial allocation of permits? Because that has an effect on what it ends up costing either the different firms or the different countries that are trying to come to an agreement. Here we used a very simple example of, well, each firm gets the same number of permits, because hey, that seems like a good starting point, and it seems reasonably fair. But what if one firm is a lot bigger than another firm? They could argue, well, I should be allowed to pollute more. They could also argue that, well, say we had a situation where there are actually more permits given to those firms that were polluting more because they didn't know that this was going to be a problem when they decided to pollute. So, well, that doesn't seem fair either, because those firms are essentially in a way getting rewarded for polluting more in the first place. So it becomes a very difficult question politically. But the point is that at least allowing the trade is an improvement over just giving the permits out and forcing them to stay within the organizations. The other downside here is that the permits are just being given out, and it's the individual companies that are being allowed to profit from these permits. We could say instead that the government could auction off the permits rather than just simply giving an initial endowment. In that case, the surplus would transfer from these firms that are profiting from the sale. That surplus would instead go to the government. That too has its upsides and its downsides. Let's consider an option 3 here. In option 3, the government isn't giving anything away for free. Instead, the government is directly auctioning off 120 pollution permits. Let's assume that we're running a second price auction, which just means that the winner of the auction, meaning the person with the highest bid, actually pays the amount of the second highest bid. We'll see why that's helpful in a minute. Let's think about what happens with this auction. Well, the government starts by saying, hey, I have 120 permits to auction off. What's going to happen here? Firm C says, well, I'm willing to pay a maximum of $10 for a permit. Firm B says, oh, I'm willing to pay up to $25 for a permit. And firm A says, well, I'm willing to pay up to $20 for a permit. So in this initial stage, firm B ends up winning the auction, but he ends up paying the second price bid, which was $20. So firm B says, hey, I need 80 permits, and I can get them from the government at a price of $20 each. That's going to cost me a total of $1,600. Firm B is now satisfied. He's got all the permits that he needs. The people left in the auction are firms A and C. Again, firm A says, well, I'll pay up to $20. Firm C says, well, I'll only pay up to $10. So firm A ends up paying the second price bid, which is $10. So firm A says, well, the government already sold 80 permits. It has 40 more to sell, so I can get 40 permits at a price of $10 each. So firm A spends $400 on these permits. All the permits are sold. So now that we know who's buying the permits and at what price, we can think about what happens to each of the individual firms. Firm A, we said, bought 40 permits at $10 each, so the cost of their permits is $400. Well, they only bought 40 permits, but they were polluting 70 units. So they need to clean up another 30 units. It costs them $20 per unit to clean up, so their cleanup cost remaining is $600, leaving them with a total cost of $1,000. Firm B is paying $20 each for the permits, and buying 80 permits, he's spending $1,600, but he's now covered. He's purchased allowances for all of his pollution, so he's not actually doing any cleaning up. So his cleanup cost is zero, and his total cost is $1,600. Firm C is not engaging in this permit buying, so their permit cost is zero, but they're polluting 50 units, and now they've got to clean up. It costs them $10 a unit to clean up 50 units, giving them a cleanup cost of $500 and a total cost of $500. Now you'll notice here that the total cost is $3,100, which is higher than it was before, but it's higher than it was before simply because the government isn't giving any of these permits away for free. So the firms are now paying $3,100, but the government is getting $2,000, which it's then pumping back into services for society in some way. So you can say in net, the outlay for cleanup is still $1,100, the same as it was with the tradable permits. The difference now is that the government is actually collecting money rather than allowing any of the individual companies to profit from their initial endowment of pollution allowances. Opponents of this idea of cap and trade like to call the program such things as cap and tax, trade and tax, a whole bunch of things that have tax in the name. So now that we know what we know, we can say, well, is this in fact equivalent to a tax? And if you're considering anything to be a tax that imposes a cost on firms, the answer is yes. But that's going to happen regardless, because in any case, regardless of how this is implemented, cleanup is not free. So unless the government pays for the cleanup of these firms, it's going to cost the firms money in some way. One of the goals of the cap and trade program is to minimize that cost as much as possible.